Okay, hi everyone. My name is Chris Bell and I wanted to make another video mostly about Amazon. I came across this article today and then I posted it on Twitter. Someone here is claiming that Jeff Bezos is this generation's best investor, even better than Buffett. And I mean, he could be going for a headline and just, hoping that everyone just sees him for 15 minutes. It's possible, but I'm sure he doesn't really need that right now. So he writes this whole article saying that Buffett is old school, his, investments are old, and that, the new thing is technology. Yeah, sure. Okay. We all get it. Technology definitely makes sense. So I post this on Twitter, disagree, compare balance sheets, not stock prices. Market prices are all talk, balance sheets are walk the walk. So I get this response from Saul, and I know Saul. We're good friends on Discord, and he's just saying, they're both billionaires, whatever, no big deal. They both have good investment strategies, and there's no reason to compare one to the other. But I have actually compared them quite a few times, and looking at the stock prices right now, let's just look up Amazon. The only thing that's up in COVID right now. Let's just look at the absolute max. Woo! Look at this. Who am I to be a critic of this bubble, right? Oh, maybe it's a bubble, maybe it's not. Let's compare. Let's see what we have here. So a company can have a stock price go up to $1 million for no reason, of course. I don't think anyone is that ignorant. But your balance sheet can only get so big so quick. So if you started saving a bunch of money, let's say you get a job tomorrow and it's making $1 million a year, and you're spending $500,000 every single year because it's a new income. So you're not saving a ton of it, but you're saving half of it, and it keeps growing. Well, another person could be saving 3/4 of it, and another person could be saving 25% of it. So even though all three of you make $1 million a year, you end up with vastly different amounts in your savings account. That's where Warren Buffett is the titan of all titans, is what he actually has in his balance sheet right now. So that's what I want to compare here. Yeah, their stock price is high. Yes, I've made a bunch of videos saying that it should be lower. All I'm doing is comparing it. I'm not saying that they're a bad company. They're an unbelievably great company. And sure, they're taking over the world with tons of sales, but they aren't making the money yet. And they don't have the money in their balance sheet to have the stock price this high. I would love to buy the company if the stock price was 1/10 of what it is right now, but it's not. Even 1/10 of it would be a premium. This is an exorbitant, ridiculous, high price premium for what they have right now and what they're making. So let's get into this. I made a video a long time ago. Is this the first one that I made? No, this is not the first one. This is the first one I made. Back in September 2018, the price was $1,900 and there were almost $1 trillion market cap. And I compared that to a balance sheet of, maybe 40 billion sitting on their balance sheet in equity, and you're paying 900 billion for 40 billion worth of equity, worth of savings. So if I'm a person, like I just said, and I am making $1 million a year, and I've only been making $1 million for 1 year, and I put half of that into my savings account, you would say that I am worth $500,000 because that's what I have in my savings account. Plus I'm making $1 million per year, and depending on how much I save out of that, you can add that as a premium. But when you're doing it with 40 billion compared to 950 billion, that's why I said the stock price needs to be much lower compared to what it is, because it's in bubble territory. It is what it is. So then I got a lot of dislikes, of course. Negative news never really gets a ton of attraction. People like it, and people think I'm bitter because I may have missed this. But to tell the truth, I'm in cryptocurrency on a regular basis, so I understand risk and I understand Bitcoin and cryptocurrency, but this is just crazy. When you're comparing stocks to balance sheets, you compare crypto to different things. This is comparing it to a balance sheet, and it doesn't work. So then I did another one, Amazon versus JP Morgan, and JP Morgan is just an absolute titan as well. They have so much on their balance sheet, they could just absolutely crush Amazon. It's not even close. And then I made another video here about Tesla, another one just like Amazon. They're up and coming, they're early, they have a bunch of sales, but they don't have the profit and they don't have the equity. Compared to GM, an absolute titan in the industry with tons and tons and tons of net income that became huge savings and huge equity on their balance sheet. And Tesla is just not there yet. They're so young and they're emerging and they're a great company, but the premium you're paying for this is just insane. Warren Buffett, I compared to Jeff Bezos back in 2019. I compared Jeff Bezos, and if you look at this right here, you can see Jeff Bezos had 149 billion minus 143. He actually had in, Jeff Bezos amount of money, $6 billion plus 4 in equity, and he only had about 10 billion. And I think Buffett had some kind of ridiculous, actually right about there, 42 billion. So I did all the math in this video. If you want to come back to this video on my channel, I'm not going to go through the whole thing, but you can just see this is what it was a year ago. Warren Buffett had 42 billion to his name, and Jeff Bezos had 10 to his name, and it hasn't gotten any different. Warren Buffett is still that much bigger, and you look at 42 compared to 10, but imagine $1 billion. If you had $1 billion, and not only has Jeff Bezos made 10, that's insane, that's awesome for him. Warren Buffett has made 42, he's done it 42 times. Jeff has so long to go, 4 times what he's already done, he still has to do just to catch up. And during that time, while he's catching up, Buffett is going to be going even further ahead. So it's just crazy the amount of money that Buffett already has in his savings account. And that is why the value investing, I have read so many books. These are the books that I've read about Warren Buffett. Warren Buffett Ground Rules. It all talks about balance sheet. It honestly barely gets into the income statement. He only looks at the income statement if it passes his judgment on the balance sheet. If he can't get past the balance sheet, he's never even going to get to the income statement. So round 1, he goes from the balance sheet. Round 2, he starts looking at the income statement if it passes round 1. And then again, round 3 goes to cash flow, and it just keeps going from there. He's just a balance sheet guy. If you can't save the money, he's not going to buy you. Graham to Buffett value investing, again, balance sheet. Warren Buffett accounting, it talks about just kind of a listed everything that's on the balance sheet, everything that's on the income statement and the cash flow statement along the way and what they each mean. How Buffett does it, he buys companies that have the decreasing stock price. So right now everyone's hyped into tech, and they only have a low amount of equity compared to their stock price way up here. So when it comes all the way back down, it pushes banks and titans, like I just mentioned. All those titans go down because tech and the excitement of tech has kind of gone away for a little while, and it all starts coming down. But the banks and the really good ones, the really good companies that have a ton of money that people say, oh, that's old school to buy Goldman Sachs. Well, I'm sorry, they're on the Dow Jones 30 top companies. So Amazon's not yet. Why? Because they don't have the balance sheet. I'm telling you, that's what it is. It's not about sales. It's about a titan of a balance sheet, and that Apple has that too. So The Intelligent Investor, one of the best books. This is just a great book to look at. The market is funny. It does funny things, and right now it's doing really funny things because COVID's going on. Lots of stuff going on in the world. The political debates going back and forth between Republicans and Democrats is just a huge problem in the world. So stock prices are down, and there's some good value purchases right now. Graham Dodd's security analysis. This is like 600 to 800 pages long. And then one side note, Tony Robbins, who basically claims, along with Warren Buffett says 99% of people should just dollar cost average into index funds forever because no one can time the market. And such a low percentage of people have successfully timed the market better than an index fund over the years that there's no reason to even try. Don't waste your time and effort. Spend your time and effort increasing your income to put more money dollar cost averaging into just slowly and keep adding into an index fund. That's what Tony Robbins claims here, and he gets into the mind game of it all too. When the market's down, how do you cope with it, and what do you do? And it's much easier when you're just adding $500 a month rather than, oh, I should put it all in right now, I should take it all in, and then trying to time it. It's very stressful. You try to look at recent news that has nothing to do with the whole stock market in the scheme of things. Again, the whole stock market is based on equity. It's all equity. So let's look at a couple of things. Let's see how this stuff has changed. This is OTCmarkets.com, Amazon financials. I came over here, clicked on financials. Let's click on balance sheet and see what they got today. This is the most recent annual report. You can see right here, blah, 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 blah. I'm going to get down to total assets before the liabilities. Total assets, 225 billion. It looks like million right here, but there's 3 extra zeros. I'm going to come right next door here. This is a different website, but I had to get the free financial results for Berkshire Hathaway, which is Warren Buffett. So this is just company to company. They both own, I don't know, 10 to 15%, but I think that it's very similar what they own. When I did the last video, it was anyway. They had a similar amount of shares, so 10% versus 10%. But they both have fractions of these two companies. Basically, their entire net worth was in these companies for both of them. So this is the balance sheet for Berkshire Hathaway, a ton of companies that they own. So let's get all the way down again. That's total current assets, total assets before the liabilities start right here, 738. So if this was 750 versus 250, we're looking at 3 times the assets. And we're just 225 again. This is billions. We're talking about billions. Warren Buffett has $750 billion in assets, and Jeff Bezos only has 225. So we're talking titans again. This is just crazy. I'll show you this. Down to the equity, okay? Minus the liabilities right here. Total liabilities 163. A little bit of blah, blah, blah. Total stockholder equity. This is what gets divided out by all the shareholders. So your $1 trillion that you just paid is only actually worth this amount if they liquidated today. So everything is all hope and future and glamorous news articles about the future. Now let's talk about what the Titan dinosaur has right now. Mr. Old School Dinosaur, Warren Buffett, total liabilities 366, double. So he has triple the assets, double the liabilities compared to Amazon. All right, yeah, that sounds pretty terrible to me. Total shareholder equity. Total equity right here at the bottom, 372. Come on, 372 compared to 60. 6 times the amount of billions. He has 6 times the amount of billions that Amazon has. So there's no way you can claim that Jeff Bezos is today's great, because their stock price is high right now. It doesn't matter if their stock price is high. Warren Buffett just sold off a bunch of airline stocks and did a couple other things, but his income is insane too. We haven't even gotten to the income statement because I'm a balance sheet guy. This is what Warren Buffett teaches you, is to buy companies that have this, because when the whole world goes nuts and everything goes crazy, the equity is what counts. When the stock market starts going all the way down and all the prices are down to zero, you say, oh, Amazon's still the best one to buy. No, it's not. This is going to be down too. And there's no excitement in Warren Buffett. He has no glamorous news articles that he posts. He doesn't put a whole bunch of money into marketing himself or, glamorous watches. He drives a Subaru, and he's had the same residential house in Omaha, Nebraska forever. There's just hilarious stories of him spending so little money. He complains about spending $10 on a haircut because it's $10 that over hundreds of years would turn into way more money. So he doesn't even spend $10 on a haircut. He's just hilarious and simple. The simple things that he does, that he just holds on to with no emotion. This is an emotional purchase right now. It's completely emotional. People who are purchasing this stock right now are just in glamorous hopes that Amazon is going to take over the world? Were they going to take over the government too? Amazon just going to be this new superpowered god that's going to take over everyone? I've compared them to Walmart, and Walmart's still way bigger than them with no hype, and again, no glamour, no shine. It's not sparkling in, pretty colors. It's just pure balance sheet. So I compare it to Citigroup. Again, Citigroup is a bank. They have tons of cash, just liquid cash. Amazon, I said shocking here because Walmart is so much bigger of a titan than Amazon. I compare these two, again, right now in real time. So let's look at the income too, just for annual income, last annual income, net income, all the way down to the bottom. We're just talking simple numbers today. So it's gone from 2, 3, 10, 11. The most fun thing to do is extrapolate numbers, right? And the number one rule is to not extrapolate numbers, because imagine a basketball score that starts off 2-0, 4-0, 6-0, 8-0, 10-0. Okay, boom, let's freeze it and pause it. What is the extrapolation of that game from now until the end of the game? 350 to 0? You can't extrapolate numbers. It just doesn't work. And Jeff Bezos' entire best quote is something like, your profit is my competition, so I want to always go after, if you have a 30% margin on something, I'm coming after that business to go after it at 20% or 15% or lower, because I can do it at low margin. And this is what we're talking about, 10 billion versus Berkshire Hathaway, income statement, Mr. Old School, Mr. Doesn't Know What He's Doing, 21 billion. Come on. How many of my viewers right now have ever made $1 billion or ever even seen $1 billion in an account? That's just something that would just put you in awe to see 1 billion, and he makes 21 every single year. And well, actually, let's see, 21 plus 14 plus 16 plus 30 over the last few years. 4 years versus 11 plus 10 plus 3 plus 2. He hasn't even gotten to what Warren Buffett made this year in 1 year. Never mind. Okay, so you're going to extrapolate this out. Warren Buffett's proven that he's done it consistently for 4 years. This one is going up and up, so you're going to turn this into 15 and then 20 and then 30. I mean, come on. It's not going to happen. Could happen, sure. And the stock price could go to 5,000. It could, sure. And I'm definitely making this video, but I have also I also have a master's in IT with a focus of web design and database administration. I've gone through a whole master's degree. I also, after that, I was thinking about taking over my father's small business, but I've watched him since a young kid. Real balance sheets and real income statements. I've seen real stuff my entire life. So I also went and got an MBA in finance, and I have both of those degrees right now. Like I said, I read, I soak up knowledge. I can't help it but think that this is just an absolute bubble for Amazon right now. It's the only stock price going up that I saw. Let me go back to, just want to look at the stock price. It's just so stupid. Look at that, and then just look at Dow Jones Industrial Average, max. So it went up and it had this huge dip because of COVID, and then it came right back up again. We're right in this little spot of we're not sure what's going on here, and we'll figure it out in a little bit. But the whole market has come down except for Amazon. It's almost like everyone took their money out of the Dow and put it into Amazon. It's just so stupid. I mean, you can't even see it when you're in the middle of a bubble, but I mean, come on, the numbers talk. And at the end of the day, if the entire stock market went away, let's talk about that for a second. One of Warren Buffett's thing that he says too is if the entire stock market closed down for 5 years, would you still want to hold the same stocks that you're holding right now today? What if it just paused, your entire computer shut off and said, okay, sorry, we'll reopen in 5 years. Would you be happy with this $2,400, or are you just hoping it's going to go to $2,600 and you're going to sell it? I mean, I don't even get what people are buying here. Does anyone even look at a cash flow statement or a balance sheet or an income statement? Do they even compare it? Did that guy compare anything on this titan of a balance sheet? Look at this. $21 billion every single year. The amount of money here is way over what they even have on their balance sheet of 60. You're talking 30, 46, 50, 60 right here. Without even the money he made last year, he already had 60 added. It's nuts. He's so huge. He's such a titan. Money talks. What you have in your balance sheet, this is no different than a person. When you click on this balance sheet right here, this is a person. This whole group of assets right here before you get to liabilities is your house and your car and your savings account and your IRA. Add it all up and then come down here, okay, make a full number right there. Don't even look at any debt yet. And now add up all your loan for your car, your loan for your house, your student debt. Add it all up and then subtract that number from it. What do you have? What do you have left? Do you have something positive? Hopefully you do. If you have $1,000, to me, you're worth $1,000. If you end with $1 million, to me, you're worth $1 million. Boom, period. That's it. Simple as that. That's what Warren Buffett teaches you. It's so simple. What you have left is what you are worth. What you make tomorrow in your income statement adds to this number of what you are worth, period. So he's worth about 10% of this. So again, remember in my first video, I said it was about 42 to 6 or 42 to 10, I think it was. Now it's 10% of this is, he must have more than 10%, but we'll just do 10% versus 10%, is 37 billion compared to 6 billion for Jeff Bezos. So numbers talk. If everything liquidated today, I would much rather hold on to all of this money because the price for this, the funniest thing about this, 6 times. He's 6 times bigger. Not only that, the stock price for Berkshire is cheaper than the stock price for Amazon. Amazon is over $1 trillion total value. Let me click on, where do you click on that? Market cap, 1.1 trillion. Insane. What is the market cap here? Let's see where. Okay, I think it's right here. Yeah, so market cap, 421 billion. All right, so if you had $1.2 trillion in your pocket, you could buy Amazon once with all the numbers I just showed you, or you could buy Berkshire Hathaway 3 times. 3 times. You could buy them 3 times. $370 billion that I just showed you on the balance sheet, you would get this 3 times. So if you have $1.2 trillion, tell me how you're going to invest that money right now. You decide to offer some shares out and everyone gives you all the money. You get to invest it. Tell me, which one are you going to buy? Amazon, or are you going to buy 3 times this balance sheet? That is $1 trillion right there. That is exactly $1 trillion. You would have about $1 trillion. So you could spend $1.2 trillion to buy this entire company. And if you stop making income for some reason, because all the McDonald's and big companies that you own, Goldman Sachs, JP Morgan, Apple, if all of those companies happen to go out of business and Berkshire Hathaway goes down, then you would end up having 3 times this number, which is $1 trillion that you could sell. It's, you have the money. And then whatever you make tomorrow is just a bonus. If you did the same thing and you spent $1 trillion on Amazon, you would go to the balance sheet and you would only have 60 billion. That's it. 60 billion. You would have spent 1 trillion, and again, you close down tomorrow, so you can only buy one Amazon because that's the price on the market right now at $2,400. You can only buy one of these companies and you get 60. You can buy 3 of these companies, 400 plus 400 plus 400 equals 1.2 trillion, and you get 3 of these balance sheets, which is 1.2 trillion. I mean, it's the most simple math ever. Stuff minus loans equals what you're worth. I mean, people need to get it into their heads. People need to get it to realize it. It's so simple. It's the simplest formula. And what you make tomorrow, hustle, hustle, hustle tomorrow, make some more money, add it to your pile. Or buy another thing. Buy another house and it will go to your assets. And then you have the loan on the house and it will go to your liabilities. And you'll have a big positive number at the bottom. So if you buy a house or something, it still gets added to that. You buy more stuff that makes more money, and then your house, you rent it out to somebody, it makes a little more income per year, you add it to your pile, and then eventually you buy another house or you buy another stock, and it keeps going up. So Warren Buffett buys things that make money. Amazon is buying things to sell it at lower margins and make lower profits. He is a huge, great titan as well. Billions of dollars. I don't have billions of dollars, so I'm not trying to say he's bad in any way. His company is amazing. The stock price is just too high. Simple as that.